everyone. In 2020, Cadbury Dairy Milk launched a line of chocolates with "Thank you" written on the packaging in 8 Indian languages. This was to thank the COVID warriors. Now, the interesting part is the proceeds went to health insurance policies of daily wage workers. Isn't that a sweet initiative, right? Now that we've started off this webinar on a sweet note, right? Hello, everyone. I am your host, Anika Sridhar. But before jumping in, we would first like to introduce Tether. Who are we? In a nutshell, we are fintech enthusiasts, but there's more. Tether was conceived by like-minded individuals with backgrounds in the financial services ecosystem. In addition to being a converging point for all things fintech, Tether is a place to ask, learn, and grow. The community also functions as an open forum where participants can reach out to industry experts, know about products, latest industry news, and get more insights. Do join the community. Whether you're a fintech startup looking for investment or a fintech enthusiast wanting to keep up with the latest in fintech, Tether is the place to be. Presenting to all of you a sneak peek of Tether through a video.
Strength of the wolf is the strength of the pack. The strength of the pack is the strength of the wolf. Since our founding, M2P has wanted to give back to the community we grew from, which led to the birth of Tether. Tether is a community for like-minded people from across the globe. This includes startup founders, fintech professionals, students, and enthusiasts. Tether, with thousands of members like you, will act as a catalyst in the growth of the fintech industry. Tether also acts as an open forum where participants can reach out to industry experts, learn, and grow. You can achieve mentorship from industry leaders, mentorship for funding, an opportunity to network with peers, and access to a world of events apart from a host of services. Join your peers today. Grow together, tether together.
Log on to www.tether.community to become a member. The link will be available on the chat section of your screen. You can just click on it and be a part of the community. Now, jumping into what we have in store for today, Insurtech is the next big thing. Did you know that Insurtech's market size is projected to reach $172.6 billion by 2030? Technology has resolved the cumbersome strategies and helped the insurance industry grow by leaps and bounds. Insurtech is sure a game changer as it helps businesses offer seamless insurance services. To know more about the role of fintech, changing customer behavior, advanced technologies disrupting the insurance industry, how Insurtech is transforming the insurance industry itself, and many, many more such questions, let's welcome our speaker for the day. Mr. Chiranth Patil is co-founder and director of Riskcovry. With a mission to transform the insurance sector in the digital era, Chiranth, with his team at Riskcovry, is reimagining insurance distribution for insurers and distributors alike. He's also associated as a co-founder at Beta Plus Capital Partners, where they support early-stage startups in an angel capacity. His forte lies in business strategy, analysis, and startup growth. With more than a decade at the helm of established organizations like Gito, Deloitte, and MEDICI Global, Chiranth is a pillar of the insurance industry as a whole. Hearty welcome to you, Mr. Patil.
Thank you. Thank you for having me over. Not sure if I deserve all the praise, but appreciate it. Thank you.
A small note to all our audience members here. I'm pretty sure all of you will have questions. So any of your questions, please do share them on the Q&A section at the bottom or at the right-hand side of your screen. So right after our speaker's presentation, we will have a small Q&A session where all of your questions will be answered. So please do send it across on the Q&A section that you can find either at the bottom or at the right-hand side of your screen. On that note, let us flag off the webinar. Insurtech, the emerging fintech accelerator with Mr. Chiranth Patil. Over to you, Mr. Patil.
Thanks again, folks. Great to be here. Thanks for giving us an opportunity to talk about a topic that is very dear and close to our hearts. So Insurtech is a buzzword and has been a buzzword for some time. And we have seen it from the sidelines. And now, so as operators, getting into the depth of it and building this out at a time where insurance is topical for many organizations, not just insurers and distributors, but also companies that had nothing to do with insurance, right? But want to add insurance to assist their consumer bases and protect their consumer bases, either by way of providing it as a value-add service or to extend the lifetime value of a consumer. Insurance can become that pivotal insurance financial services product. And it's been a satisfying, it's been a great journey, and hopefully we can sort of double down on this and grow even faster to help the ecosystem at large in terms of closing the penetration gap of insurance in India. So on that note, let me kind of quickly pull up a deck that we had kind of prepared to facilitate the understanding and the visualization of what we are going to talk about. So just give me a sec here, I'll bring that up. So before jumping in, and I've been told to speak for about 20-30 minutes or so before taking Q&A. So I'll try and sort of time box myself. Just for some housekeeping perspective, what we'll try and cover today is essentially a 360-degree view of Insurtech. The first is the insure part, or the insurance company part, the tech part, which is mostly from a technology lens of where technology is influencing the industry. And finally, us as an Insurtech, right? As Riskcovry, talking a little bit about us. That will be something what we'd like to cover. A lot of what we're going to be talking about is from an infrastructure perspective, especially from the company perspective, because that's where is the biggest dearth of innovation and the depth of innovation is coming out, and on building the foundations, right? Building the rails, building sort of the tunnels, the core infrastructure on basis which insurance can scale. We'll talk a little bit. We'll be a little bit more biased on infrastructure. Just a heads up to everyone here. And obviously a little bit of a sales plugin at the end in terms of what we do at Riskcovry and how we can work with some of the folks who have joined this particular webinar. And we are coming from a perspective, we don't know all the answers, but we'd like to, all right? So challenge us, please, feel free to kind of ask questions. I think the Q&A section is going to be active and very much sort of, startup mindset, learning as we go as well. Learned a whole lot more than what we did about 4 years ago or so when we started, but the learning continues. So please challenge us in terms of any content that comes to your mind. So we'll talk about the insurance industry first. So fundamentally, we think that we are in the third 3.0 or the third evolution of insurance globally, right? 1.0 was back in the day. So the first insurance policy, believe it or not, was written about 6 centuries ago. And it was a mercantile sort of a insurance policy to cover for damage of goods between countries that were shipping goods to each other, right? So, and then came sort of, things like in the context of India, liberalization of the markets where a bunch of insurers from other, countries came and set up shops here. And that is sort of what we loosely characterize as 2.0, which where the markets opened up, right? And so 1.0 where the use case was established, 2.0 when the markets opened up, third is when sort of the user experience has has become completely digital, or the user experience itself has changed and completely flipped on its head and become digital first. So it's very much a demand side, demand-led kind of an evolution where the demand is driving growth, right? People want digitization. People want to discover financial services, digitally. They want things real time. We all want personalized, insurance policies. When two people at the age of given age, say 40 or so, when they have two different sort of risk profiles, why are they paying the same kind of why are they paying the same kind of premium, right? So personalization is key. Connected insurance is a boring topic. Let's be honest. It is something that everybody needs but nobody wants. So if insurance happens, without our knowledge, where we feel protected and don't have to deal with this particular financial service day in and day out, that is potentially the Zen place to be, right? So we think that insurance is getting more and more invisible and more connected. So that is the 3.0. That is sort of our view of where the industry and how the industry has kind of matured. Market share, so a lot of India's market share is predominantly on the life side. And then sort of, it trickles into the health and general and sort of other aspects. No brainer there, because insurance has mostly been sold as a more than a protection instrument. It is mostly has been sold as a wealth management instrument, right? With tax savings and all of that, especially on the life side. And hence that's why sort of the most of the product lines are there. But post-COVID, and if you see the kind of new products that are coming out on the general side, on the health side, connected sort of insurance use cases, group products, bite-sized micro insurance products, combination of products, etc., etc. It's a very exciting time, because the kind of product innovation that we have seen from insurers and reinsurers in this market is unparalleled. It has never happened in the history. The kind of innovation that is happening, both in terms of diversity of products and the depth of coverage, right? It is an exciting space overall right now. And if you look at the current market itself, essentially we're at a little over $100 billion. We expect there are some predictions in the past from Anega as well, but we think that market is likely going to double this decade itself. And we have sort of, and it's growing quite fast. If you look at sort of the CAGR rates of each of these lines of insurance, from general to health to life, these are more than the GDP of our nation, right? So insurance as an industry is growing much faster than our nation from that perspective. And no surprises that the most of the insurance gets distributed by directly or via agents. And sort of, agents could be some people who are attached to certain insurance companies, or could be individuals who are not aligned to a particular insurance company, but are aligned to sort of the intermediaries, right? Intermediaries would be like, the banks and brokers. These are licensed intermediaries. There are 3 kinds of insurance distribution licenses that are issued by IDA, our regulator here in India. The top 2 being the brokerage, and the second would be corporate agency, which is what the mostly banks tend to use, right? With corporate agency, and distributor can work with about, say, 3 insurers each per category, and that now has been opened up to 9 insurers per category. For example, from 333 on the general health and life side, now corporate agents like banks can work with 999, pretty much tripling the amount of insurers that they can empanel and distribute their products, right? So which is a great tailwind for the industry right now. So that is sort of the lay of the land as far as where insurance is from a evolution perspective. In India, what is the market share by different kind of categories, and who are the different kind of channels that insurance gets distributed via. So essentially, what's happening is that, thanks to what we think as consumerization of financial services, right? Where consumers are driving the demand and sort of the overall experience. Its customer experience is the central agenda for every industry, more so in financial services. And the reason is because, digital is obviously an easier way to start the journey, right? Financial services is very heavy. It's regulated. It is full of jargons. It is sort of, confusing. But more and more end users are gravitating toward digital channels to start their journeys. So 3 out of 5 consumers in urban and semi-urban, populations begin their financial services journeys completely digitally, right? They may not end digitally. That's where sort of assisted programs and all of that come in, especially for push products like insurance. But that's fundamental sort of, what is driving a lot of demand. Everyone wants, personalized solutions, which is a no-brainer, right? We spoke about this earlier. So demand has been essentially, it has expanded the pool, right? Especially on the back of digitization. And what supply is doing, the supply would be the underwriters, here, right? The insurance companies, the reinsurers, etc., who take the risk on their balance sheets. They are aggressively reacting to what the demand is wants, right? So, for example, pretty much every insurer in Riskcovry, for instance, we work with about more than 40 to 43 or so insurers in India to whom we have built pipes into out of the 58 plus in India, right? And the central plate of every CEO's agenda there is digitization, right? It is something that they want to launch multiple products. They want to launch, very interesting sort of, programs that give them the market edge. But digital is something that is not a conversation at all. So it is not anymore. It is digital. It's not digital first or digital only. It is or rather it is not just digital first, it is digital first and digital only, right? In certain cases. So that is sort of the change that we have seen over the years. And that is great for the ecosystem at large, because we know that via digital technologies, cost of distribution reduces. That means that we can sort of pass on the economic benefits back to the different fractions of the value chain and help them to adopt more and more products and services. India relative to global insurance market, if you were to put one against the other from a relative benchmarking perspective, essentially we are a drop in the bucket, right? We have about more than 15% of the Earth's population living in our country. And from an insurance perspective, we are basically 2% of the overall market, insurance industry market, right? We are far way off from sort of, so if you look at sort of India in terms of penetration rate relative to the rest of the market, rest of the world, we are 50%, of the rest of the world, right? So the global median penetration rate, insurance penetration rate in India is little low. It's around 3.5 or so. When you compare it to the rest of the world minus India, it's about 7% or so. And this is the second most populous country in the world we're talking about. So there's definitely something that is clearly missing in terms of or rather the kind of macro tailwinds that we have in terms of the growth of this particular industry is unparalleled. So we fundamentally think that India is the most exciting insurance markets, globally speaking, because of this dynamic. It's a young country, ambitious country, digitization is central agenda, very small size, long way to go in terms of covering the gap. And we are growing extremely fast. We are probably the brightest spot in terms of macro economics, globally speaking. And insurance is no different. In fact, insurance is growing faster than the GDP of the country, as mentioned earlier as well, twice as fast. So when you all put together all of this, is a very exciting time to be building for insurance with an Insurtech approach in India. So that we covered mostly the insurance side. Now let's kind of double click into the Insurtech side, right? The little more on the tech focus. So a little bit of this data might be dated, but sort of, it won't have drastically changed. So what we think is that essentially India is home to 1 in 11 Insurtechs globally, but only gets 1 in $17 or so in terms of early stage capital. Right. So the amount of money that goes on a per company basis, per Insurtech company basis, is lower in India than the rest of the world, going by this data alone. Right. That has changed dramatically. Some companies have kind of gone, Insurtechs have gone public, doing quite well. There's a lot of momentum right now in this particular space, a lot of availability of early stage capital than ever in the past, right? But this is what the data tells us. There are 5 predominant Insurtech models in India, right? One is, a little bit of sales plugin in terms of our own company here. So please excuse that particular language, but the focus here ought to be in terms of what are the different kind of Insurtech models in India, right? According to us, predominantly there are 5, right? One is direct distribution. These are your brands, right? These are your brands like Policy Bazaar, etc., where you can go in and buy an insurance policy yourself, or you get a telecall to kind of close the the loop, etc. And from a conversion perspective, regardless of that, these are brands that actually are consumer brands, right? For the purposes of insurtech or insurance distribution, they don't underwrite themselves, right? Typically, so that's where the policy bazaars of the world come in. Then the distribution enablers. These are your technology companies that assist existing distributors, right? We see ourselves here as well because we work with banks and brokers and fintechs and NBFCs, home finance companies, so on and so forth. And we enable them to kind of distribute insurance, right? We don't go direct to market. Some of these there is some overlap here. Some of these players have sort of those kind of businesses that go direct to market and service the distribution side as well, right? But by definition, this is mostly non-underwriting but enabling of distribution, right? And are not exactly brands per se from an end consumer perspective. Then third would be your digital insurers, like which would be sort of who are actually licensed insurers, like Digit and Acco, and they have a core digital thesis, so they are considered neo insurers in that sense. But this is like any other insurer, except that they are, when the company got incepted and incorporated and growth and given the DNA of the company, they are far overweight on digital than their peers. Right. Fourth category would be enterprise tech or SaaS startups, whose customer is the insurer. The customer is not the distributor. In the second bucket, the customer is the distributor, like a bank or a broker or any organization that can distribute insurance. In this particular case, in the fourth case, the customer of these kind of startups, the enterprise tech startups, is insurance companies. Right. Then there's the fifth category that is the most exciting category according to us, obviously biased for coming in from a founder, but this is where we think that we are more of a horizontal than a verticalized play, where you are essentially building, the rails or pipes or wires or tunnels or whatever you call them, but basically APIs, right? These are communication protocol. API is the unit or communication protocol of the internet, right? So you're building that for insurance. And that's what Riskcovry is all about, connecting the dots between large scale distribution and underwriters like insurers and reinsurers via APIs. So that's the tech infra kind of a play, which is horizontal. Hence, we'll have some of these insurers that we have spoken about here are our supply side partners. Some of the other logos that you see here are our distribution side partners. Some are sort of partners who can help us to complete our roadmap, because what we build is the core API infra, and we have a very partnership heavy DNA, which allows us to work with other nimble insurtech startups as well to help complete our product map and go to market in a win-win fashion. So we do that as well. So hence we see ourselves as a very much a horizontal play. A little bit sort of, data that might be, interesting to see is like, if you think about it, all these startups, a bunch of startup logos are here. Having a underwriting play like these digital insurers is capex heavy, right? You need to kind of set aside a fair amount of capital to acquire the license and then build the book. It's a very different business model relative to underwriting light insurtechs that don't bring risk onto their balance sheet, but essentially are looking at customer acquisition or enabling distributors with a much easier with lesser capex, right? And so most of their expenses are on the OpEx side. So in terms of customer acquisition or brand building, so on and so forth. Essentially, what you're seeing is in insurtechs minus the insurer play, most of the play is on the distribution side, right? Because insurance by definition is the only financial service that has double-digit kind of margins, right? Because it's a push product. So there will always be sort of a requirement to kind of digitize and make the entire distribution play as simple, as efficient as possible. So hence, a natural space for insurtechs to gravitate towards and monetize from is on the distribution side, because there's always margin on the table, right? And that's what we are seeing, right? That bunch of even non-insurance companies or whose agenda is not about solving for insurance distribution, like say Ola or Make My Trip, or these are consumer internet platforms. They are doing insurance business and at scale. So this is like again probably dated sort of data, but Ola does 20 million plus monthly trip covers, right? This is probably a few years ago. The scale may have been maybe much higher from those levels now, right? So there's a lot of money on the table as well, because see, why does anyone distribute insurance? Insurance gets distributed for one of three reasons. One, someone wants to monetize. You want to monetize from your large consumer base, because then there are interesting distribution margins on the table. So that could be an attractive way to kind of build an alternative revenue channel. So basically, distribution forms is a natural place for startups to kind of gravitate towards and help distributors to kind of distribute insurance for one of three reasons. One, as I mentioned earlier, it's to monetize, right? Attractive distribution margins, large consumer bases can become a large, meaningful alternate revenue channel. Second is to provide as a value-add service. Insurance, by definition, is a risk mitigation service or a risk mitigation tool. So that can be used by distributors to provide as a value-add service back to your customers. For example, attaching insurance programs against your credit card, right? That's a value-add service given by for the issuing bank, for example. Or say, examples would be like, so let's take Make My Trip as an example, right? So when you attach that insurance on the back and buy that insurance product or a trip cover on the back of the flight ticket purchase, obviously it's Make My Trip is making some money out of it, but also is providing that benefit. That benefit, if there's something happens, if there is like a flight delay, flight cancellation, baggage loss, whatever, etc., you're covered. So that's a great value-add service, right? The third reason that insurance gets distributed is to protect lifetime value of a customer, right? So when insurance gets introduced into the mix, essentially you are hedging a negative outcome that might erode that customer base. For example, say attaching insurance against credit. For example, getting home insurance on the back of a home loan, right? Now, if something happens to your home, like there's a property damage or a theft, whatever it is, right? Your inclination to pay against the EMI goes down as a principal borrower, because the asset itself has been damaged. Why keep paying for it? That's where insurance comes in and puts a backstop against the loss for a lender, for example, right? So that's an example of how insurance can not only provide value-add service, but also protect the lifetime value of a customer. So we have this sort of, when we started this company about 4 years ago, founders coming in from different parts of the ecosystem. Some of us had spent time in insurance and built and scaled insurance distribution books to a few hundreds of crores before starting this company. Some of us had a grand total of 0 days of working experience working in insurance industry, but were just excited about where technology and data can be infused into this value chain. And if we were to take a bold view, right, as a company, to say that if we were to just close the gap in terms of insurance penetration rate of where India is now versus where the rest of the world is, and suppose we do that in this decade itself, right, going from 3.7% to about 6.3% or 6.5%, right, by the end of 2030, what will that mean, right? What will that mean to the insurance industry market? We'll see an explosion, right? We'll see an explosion of the overall market. We think that market can grow as much as 5 times, multiple licenses issued, many startups, building and solving for different parts of the value chain, many products getting introduced. And the most humbling aspect is the growth in terms of number of lives gets insured, right? We are still a country where, predominant sections of our overall, population is completely uninsured, right? If not uninsured, they're definitely underinsured. So that's where sort of we'll see, that is our thesis, right? That if we were to just go from where India is now to where the rest of the world is already now, and that gap gets covered in the next sort of, 7-8 years from where we are right now, we are looking at these numbers in front of us, right? Which is fantastic news, which brings in the realistic question as well. Will this really happen? Will the market really grow 5 times in the next 7-8 years? That's a tough one to answer, right? But this is just data doing the talking. The data is saying that, we are at 3.7%. If we were to go to 6.3% in this decade alone, this is the changes that are going to come in. So that's that. Overall, what would be required to get to that 6.3%, to get to that 6.3, 6.5% in terms of insurance penetration rates, right? It is not a simple, answer, because at the end of the day, insurance is a promise product, right? You pay something upfront in the hopes that you never have to use it if at all, sort of, and in an advantage situation were to happen. So basically, it is the only product that you buy that has such low gratification that even if after you buy it, you don't want to use it, right? So how do you democratize this? So what are the problems? The problem is really, in our view, the T word, right? One of the 3 T words, trust. And trust is a big word, right? So there are so many problems to solve, that, I don't want to go into too much of this. There are a bunch of problems. We can, talk about this separately, but essentially there are, whether am I getting sold something? Is there sort of, misalignment in terms of incentives? Will someone really pay my claims after me sort of, putting in the upfront premium? How do I really make there are about 100 different products out there, how do I know which one is the right one for me? Right. So these are sort of fundamental questions that anybody would have, especially those who are not introduced into the formal financial services ecosystem. Right. So, and so for us, it means that we need to solve for trust. So the first T of the 3 T's is really trust. Right. The second T is timing, right? So if you think about what happened to insurance on the back of COVID-19 is similar to what happened to payments on the back of demonetization, in the sense that the user behavior fundamentally changed, whether it was forced and fundamentally forced as well, but it changed at that point in time because you had no other option but to adopt digital, right? That we think is phenomenal, and the rate of change because of that has been quite exciting. So COVID-19 has definitely boosted the industry as a whole. There may have been short-term pressures in terms of underwriting profitability and all of that over the years that COVID lasted, but by definition, it opened up the market to thinking about insurance as well. And when you start your insurance journey, not because you are forced to buy a product like motor to cover for your vehicle as an asset because the government says so as a regulation. You want to do it yourself, to cover your own health, your family's health, or your near and dear one's health. That is a fundamental shift in user behavior, because that enables you to get educated about all other products that come under those kind of optional categories like life, etc., as well. So, and you decide your own journey as against being sold to. So these are sort of amazing things that have happened on the back of COVID-19. If at all COVID-19 has a silver lining, it's, in our view, it's about sort of people's heightened acceptance of insurance as something that is mainstream and hygiene for them and their own families, right? And what's happening right now is really the perfect storm, right? So new products are being underwritten, distribution has sort of getting sort of more and more simpler, digitized, favorable regulations. We have an amazing forward-looking regulator relative to sort of other insurance regulators. We think probably IRDA is one of the most forward-looking regulators for an industry that is still a poorer cousin for banking, right? So that we think is amazing. There's a fair amount of early stage capital that is coming into startups. A lot of talent crossover. People from insurance companies are starting Insurtechs, so on and so forth. So Insurtech, early startups folks are getting sucked into sort of insurance companies to make them more nimble as well. So data everywhere, tech has become a buzz, not just a buzzword anymore. It is something that is hygiene. Everybody has a tech agenda that is center of the plate. So this is a perfect storm. And that's why we think timing is very important from a scalability perspective. The third T is technology, right? We see whether you, sorry. So where, regardless of where you see yourself in the uh, value chain of insurance, whether you're on the demand side, distribution side, supply side, um, tech is playing a role everywhere, whether it is enterprise tech, API, SaaS kind of business models, then robotic process automation, data sciences, distributed ledger technology like blockchain, etc. There is a use case for all of this tech across each of the value chain, each of the sections of the value chain of insurance. Right. So, and this is still day zero. We are just scratching the surface of where, Insurtech can really go. Think about it. It's a $6 trillion industry and there is no global Insurtech winner for an industry that has been around for 6 centuries. Right. So the question is why? And that's why we think this is still day zero. For many startups and many companies who are in the Insurtech space. So a little bit about Riskcovry. So for us, really, it is to solve for that first T, right, using technology. And the timing is now for us. It's really to solve for trust. So there are, if you look at the supply side and the demand side, for us, the demand side was anybody who can distribute insurance. And the supply side is anybody who underwrites insurance products or related products. And navigating the supply side for a distributor like a broker or a bank or a enterprise or startup, doesn't matter. If they want to launch insurance programs and they want to tie up with an insurer, it is a nightmare, right? It is chaotic is the right better word than nightmare, because there are so many permutations, different insurers, different sort of underwriting disciplines and capabilities, different products, different price points, different channels to distribute, licensing or no licensing to think about. So it's a very sort of complex sort of a space to navigate for the demand side. But they can do it easily if they just want to think about just one or two products from one or two insurers and just take it to market. The complexity arises with 2 and 2. When you want 2 insurers with 2 products or 2 products underwritten from 2 different insurers, and you want to scale that as a major distributor, that's when it becomes super complex, right? And that's the problem that we want to solve, to make it as simple as possible for the demand side to work with the supply side using APIs. And the solution is really like an insurance in a box, right? We'll talk a little bit more about it, but essentially what used to be multiple point-to-point integrations without Riskcovry can now work with a single unified API kit. One unified API kit can give you access to about 40 plus insurers, 100 plus products across 3 different distribution channels, and cover the entire life cycle from buying to manage. 3 touch points with an insurer, with your insurer or insurance company, right? One is at the point of buying a policy. Second is when you're managing it. For example, you have put in a digital locker, or you want to kind of change the nominee details, etc., etc. That's what we call as, or renew it, for example. That's what we call as manage. And third is in the unfortunate circumstance you want to use, you have to kind of file a claim and all of that, right? If some distress event has kind of occurred. So when those kind of use cases and workflows needed to be digitized, people don't have to look at different sort of individual API kits of all these insurers. They can work with us, and we do all the legwork to work with multiple insurers in the backend, right? So it is one unified API kit that is agnostic of insurance company, agnostic of channel of where that insurance product is going to be sold, in the assisted channel, DIY channel, embedded or attachment channel. And it's completely agnostic of the life cycle by managed claim, as mentioned earlier, in different products, right? Right now, like I said, we have more than 100 products, micro products or group products, retail products, different, etc., etc. We can make combo of products. For example, one of the things that we are market leaders in is to attach insurance against credit disbursement. The lender can have multiple different kinds of risk portfolios, right? They can be doing MSME lending also, they can be doing consumer durables lending also. And when you are sort of trying to cover the risk of a borrower default, you want to be very comprehensive about it. For example, on the MSME lending side, you typically you care about the death of the principal borrower, right? Because one bad loan on the book can skew the entire book because they are large sort of ticket sizes relative to consumer durable loans, which are sort of short tenure, 3 months, 6 months, 9 months, will cover a single product purchase like a mobile phone, etc. And you don't care about the death of the borrower. In the first case, you do care about the death of the borrower. In the second case, you don't. So we have built a low-code, no-code tool to essentially where sort of any balance sheet provider or sort of credit underwriter can go and customize an insurance product against any specific credit use case. Right, so go overweight on debt in the case of MSME lending, underweight on debt in case of consumer lending, mix and match products, different insurers, different products, create a combo with real-time APIs. So that is something that is a sort of one of the strong products of our company, and we're doubling down on it, not just in India, but in other markets as well. So yeah, I spoke a little bit more about this already, but really the solution is insurance in a box, right? So we see ourselves as plumbers of this business, connecting the dots between the distribution side and insurance side. And we have had the opportunity to see the industry evolve on the sidelines, and now it has become a responsibility because when we started about 4 years ago, there's nothing like Insurtech infrastructure. So we see ourselves as early to that space, and have had the opportunity to kind of define what infrastructure means in Insurtech. According to us, it's a mathematical statement, right? It's an objective mathematical expression to define the business model itself. The business model is where we say n cube times 3, right? N cube times 3 means where any insurance product from any insurer can be distributed to any distributor or can be facilitated or enabled to any distributor via APIs across all 3 channels of insurance distribution. There are fundamentally 3 channels of insurance distribution: assisted, DIY, or embedded. Assisted is when someone sells insurance to you with a human interface. For example, say your bank RM calling you and cross-selling a health insurance product or a life insurance product, right? There is human interface involved. DIY is there is no human interface involved. You go to Policy Bazaar and buy an insurance product right then and there without any human intervention. Embedded is where sort of insurance is getting tagged on the back of some other product or service. For example, as mentioned earlier, home insurance on the back of your mortgage loan, right? But when you start double clicking into embedded, which is a buzzword right now, embedded finance, embedded credit, embedded sort of insurance as well, there are 3 fundamental sub-use cases of embedded insurance: opt-in, opt-out, and invisible, right? Opt-in would be where, for example, you're on makemyyatra.com or any of those travel sites or travel aggregators, and you buy a trip cover on the back of flight ticket purchase. You're opting in at the point of sale, right? Opt-out would be, for an example, you go and buy a new vehicle, and in most cases the dealer of the OEM would have attached a motor premium on the back of the new vehicle invoice. But technically, you can say no to that and go and buy the product elsewhere, like on Policy Bazaar or somewhere else, right? So they are opting out of that particular purchase journey. And so invisible would be where you don't have a choice because you're not being cross-sold the insurance policy. It is being provided to you for free as a value-add service. For example, getting insurance attached against your credit cards. In most cases, you wouldn't know what those insurance products are which are attached against your credit cards. But if you were to go and figure, you will find a laundry list of them. And the reason it is invisible to you is because you're not consented to it, because you're not getting sort of sold that particular product. You're not sort of, literally, you're not paying anything for it. It's coming to you as a value-add service. So hence that purchase journey is completely invisible. So we power all of this, right, at scale, with an API first strategy. So that's our sort of what our definition of Insurtech infrastructure is, and sort of some business model. So I don't think we need to kind of spend too much time here. Essentially, it's the different visualizations of the same thing. If you look at the entire value chain, it really is end users like you and I, distributors who can distribute insurance like banks or non-banks or whatever, like any retail, digital, OEM, health, doesn't matter. And then the supply side, right? So our business model is to mask all the complexities for distributors to work with any manufacturer by being that one-stop shop service. So think what payment gateways or aggregators did to digital payments. So when a digital merchant wants to accept digital payments, they don't necessarily go and build their own payment gateway. They work with, different kinds of gateways and aggregators, say like Stripe, for example, right? Similarly, our view is that insurance distribution shouldn't be any more complex than that. It should be a straight through integration and make it the most simplest, most affordable, the best possible sort of solution for any distributor or any kind of distributor to work with multiple insurers and mask all the complexities of dealing with them by providing that single API, right? Or single API kit that is agnostic of distribution channels, agnostic of risk products and licenses, which by way of working with us, you can work with 40 plus insurers and 100 plus different products, which you don't have to go and build yourself, build the tech to yourself, right? We can power that out of the box. Same thing with payment gateways, right? When you work with a Stripe, for example, they will have covered debit card, credit card, different kinds of sort of, payment instruments. And similar here, we cover different kinds of categories of insurance products and make it completely a plug and play kind of a solution. Yeah, different kinds of APIs. At the end of the day, there are pricing APIs and proposal APIs, payment APIs, policy issuance, claims. All these are different kinds of APIs that are part of that single kit, right? Which helps from everything from discovery of a product to sort of, closing the sale, quoting and binding, making payment of the premium, getting a certificate of insurance, a policy certificate issued in real time, ability to generate claims, so on and so forth. Obviously, some of these have not been built out at scale, but there's a roadmap for that, right? So yeah, we have, like I said, more than 100 products now. This information is dated as well, from insurance, retail products, group products. Subscription products is interesting. Now we work with multiple API providers who provide services like roadside assistance, doctor on call, OPD, which can be tagged along with insurance products, which makes the entire distribution experience sticky. For example, as a consumer, imagine you getting a roadside assistance cover along with your auto insurance, product combined as a single product. It enhances the value of insurance that you're buying as well, right? So those kind of things make it experiences that much more sticky. And we work with multiple tens of providers, these segments as well, like insurance products, wellness products, assistance products, which are non-insurance products, technically speaking, right? Because they're not an insurance company that is providing these. We work with multiple sort of distribution partners, from brokers, digital consumer platforms like housing and Ola and Samsung, so on and so forth. Banks like IndusInd, top fintechs in the country as well, like Spitbox. Travel, NBFCs, especially home finance segment, we are particularly strong. We capture about 20-22% of the market via distribution partners already. Very excited about those kind of industries and the use cases that are coming up. And if anyone is part of any of these, anyone listening here is a part of any of the organizations that are covered here, I would love to talk. We are at hello@riskcovry.com. You can go to our website or on LinkedIn, where we are present as well. And write to us. We'd love to get in touch and see if we can solve for your insurance distribution use case. So that's all for me. I'm not sure if I've been good as far as time is concerned, but happy to take questions if there's any time left.
We do have quite some time left. Actually, Mostly the next 10 minutes we'll take a few questions. So audience here live have also posted a few questions, and we have curated a couple of questions from our social media community as well. So again, the live audience, you can still post your questions like I mentioned. In the interest of time, we will take as many questions as possible, how much ever that we can. The others will try to address it post the webinar. So yes, here comes the first question from one of our live audience itself, Mr. Roshan Kumar. So Roshan asked, the future of insurance, what makes you hopeful and what worries you? So this is a two-part question. So what makes you hopeful and what worries you, especially with respect to future of insurance itself?
Yeah, so fairly excited about the future of insurance because literally it is a slow-moving giant of an industry and digitization is, we are still scratching the surface of what can happen with digitization, right? And with advanced technologies like AI and ML and sort of, RPA and sort of all this coming in, it is only helping make the value chain more and more efficient, from underwriting to distribution to consumption. Technology is playing a role with everything, which at the end of the day, technology has been a great channel to democratize complex products, right? Or complex sort of services and make it efficient from a distribution perspective. And that's what we are seeing in insurance as well. And literally we think we are like a day zero startup in a day one industry, right? If we can sort of use that analogy. So long way to go. And yeah, excited about it overall. From what is the second part was not too excited.
What worries you? What worries you?
Yeah, worries is things like, using technology to disadvantage, right? For example, mis-selling can, let's take an example. It might be easier to correlate with this with examples, right? Embedded insurance. We talk about embedded insurance. Technically, with embedded insurance, you can attach insurance to anything, literally anything. You can, at the point of buying something, at the point of invoicing something, at the point of, there's a whole bunch of, at the point of making rental payment, anything, right? Providing against credit, against savings, against sort of CASA, you can attach insurance against anything, right? And things like making it opt-out products, for example, where people have to be cognizant of that the insurance is getting bundled automatically, right? And you have to opt out of it to kind of, make it this thing. And those kind of things when need to be mindful. You need to be mindful because there is scope for mis-selling, right? And by definition, insurance, because of its lucrative margins, push services, and all of that, is prone to mis-selling. Hence, you have a regulator who's watching out for the consumer's interest and has multiple layers of governance, including having insurance ombudsman and all of that, where you can, as a consumer, you can go and complain, right? And it'll be taken super seriously. And those are metrics that gets benchmarked by the regulator as well. So those are important things. So essentially, the dark side of insurance in terms of mis-selling can be enhanced by unethical actors, right? So that is something to watch out for. Yeah, that's where sort of trust can easily go for a toss, right? But that is not one person's job. It is the entire ecosystem and the industry's job. And the regulator is keeping a key eye in terms of the overall governance.
Makes sense. Thank you so much for answering that question. Here's another one. Actually, even from our social media community, we got a similar sort of a question. And Sarma Ganesh here has asked one question about venture capital industry and the correlation of Insurtech industry. I'll just read out the question. Sarma Ganesh asks, what will the potential of venture capital and investments for bootstrapping players be in the Insurtech segments? Similar question from the social media is like this, verbatim. What do you think the future of the venture capital industry in the Insurtech industry is going to be? So what is your thoughts about it?
I don't know how to answer the question. It's kind of counterintuitive because by definition, if you're bootstrapping, you don't need venture capital. So the potential of venture capital for bootstrap companies is not applicable. I'm not sure if I'm answering the question correctly, if I've understood the question correctly, but that's what I could make out. I'm sorry, what was the other second question? It was from?
Right. So from social media, what we got as a question was, what do you think the future of the venture capital industry in the Insurtech industry is going to be?
Oh, it's phenomenal, right? It is, if you think about it, especially now, let's look at it, it moves in cycles, right? Venture capital and kind of mirrors public markets and, other precedences as well. But if you think about it, where we are right now, payments, there are 5 fundamental financial services, right? There is payments, there is credit, there is CASA or banking, core banking, if you will, investment/wealth and insurance. So the last two, wealth and insurance, there is dearth of penetration in India, long way to go in terms of reaching sort of stable states. There is huge market and the macroeconomics are sort of as good as they could be, right? If you were to start off right now, and hence it requires more investment because it is long way off in terms of maturity of financial services, even from a digitalization perspective. The first year relatively more advanced relative to the last two, right? So if you were to look at it from a here and now perspective, the first 3, there are already market winners having been created, right? For example, M2P, right? On the fintech infra side and all of that, definitely probably the best company out there, right? I'm not just speaking about it in India. So that's those spaces. And then so much of money has gone into lending and credit. So a lot of money has gone into neobanks as well. Relatively speaking, not a whole lot in terms of insurance and wealth, right? Again, relatively speaking. So the future is very exciting. And like I said, we are literally a day zero startup in a day one industry. So long way to go. We have a very macro view, very sort of bullish view rather. We are very bullish on insurance, very bullish on Insurtech, very bullish on infrastructure. And we are not here solving for a few months or years, we are solving for decades, right? So excited about what the future holds for all of us.
Makes sense. Since we're speaking about future and something that we're hopeful for, but there's a question about an obstacle as well. So what is the biggest obstacle, according to you, for insurance startups that hold back market disruption and meaningful change?
I guess insurance is a very regulated industry, right? It is not exactly your e-commerce or social media. It is something that requires depth of understanding of the domain, various moving parts in terms of regulations, and one wrong move from a compliance perspective can essentially be a death sentence to a startup, right? So I think if I understood the question correctly, of how we from other industries from a startup point of view / scalability point of view, it's really the depth of the domain that is required. And it's not like you need years and years of experience in that particular domain to kind of become sort of, cognizant of the domain. It can very well sort of come from sort of folks that or from sort of, industry bodies and so on and so forth. But it's important to spend time there, right? It's the point. You can't just come in and hack a product away and hope that it launches and it scales and all of that. It's an extremely regulated market, so need to be very cognizant of that.
Makes sense. Here's a question from Rakesh Agarwala. As a startup looking at Insurtech as opportunity, do you think there's opportunity in being a digital distribution channel? Do partnering with Riskcovry solve the infrastructure by providing API, which can directly show us product offering of different companies, as well as partnering problems with insurance companies?
So does partnering with Riskcovry make your life easy? Is that the question?
That is a part of the question. We start off with asking, is there, the first part asks, do you think there's opportunity in being a digital distribution channel? then in terms of infrastructure, and then like, does it solve the partnering problem? So there's a sort of 2 to 3 parts in the question itself.
Yeah, I'm not sure if I caught all of that, but essentially, I think in terms of business model evolution and all of that, even we didn't start off with building infrastructure from day zero, right? We, just to put this anecdotally, the 4 co-founders who came together, we came from different backgrounds, but we had sort of some things in common, right? We were not exactly millennials, though some of us were borderline, but so we were asset heavy, so to speak, relatively speaking. We had our own homes and our own vehicles and so on and so forth. And there was no insurance distribution brand that spoke uniquely to us, upwardly mobile business owners, if you will, right? So we started off building an MSME version of Policy Bazaar, and digitizing 2 products like home and business insurance that were quite less digitized in India, and continue to be there's a dearth of innovation, digitization there, long way to go. But essentially, these were 2 categories that were really big in other markets, but had not even scratched the surface in terms of penetration here in India. And we thought that by putting a digital avatar to it, that it would be an interesting play. And it was an interesting play. We saw a lot of inbound and sort of a lot of traffic to come in and discover their unique sort of risks, and discover the right product that marries those risks or covers those risks, and then compare and buy against multiple insurance for the same kind of product, and then buy a product then right in there and get a real-time certificate of insurance policy for home and business insurance. Till now, it has not been meaningfully digitized, right? But what happened in the journey was that where we saw a lot of traffic coming in, hardly there was any sales. I think at one point it was like 15,000 web sessions in that particular week, and all of like 5 policies sold or something like that, right? And we are like, people love this. Why aren't they buying? It's because the space is pushed, right? It requires that last mile, especially home and business insurance products, right? It requires that push. It requires that one person to come in and sort of, be that almost that agent/advisory kind of, or whatever, be that sort of that model to kind of push and convert. And that was not a passion space for us. We want to use technology and data and be capital efficient, asset light from day zero while building. So we want to build more using technology and data, not as much as in terms of, branding and sort of, in terms of having a large, OPEX or a CAPEX business, right? So, that's when sort of what was happening during that time was a lot of enterprises like banks and brokers and fintechs and NBFCs, they're coming and approaching us and trying to figure out how did we go about building this entire digital journey and taking these 2 complex products, home and business insurance, and making it digitally friendly. And thanks to my co-founders who had spent decades in insurance industry, we knew which insurance products, which insurers, how to deconstruct these products, how to kind of pull it all together, what is the digital front end that kind of makes, and we iterated quite fast as well. That's when the aha moment of our startup came about, where we said that, hey, instead of becoming a brand, why can't we become force behind any brand? Let's use this tech stack that we built and to any enterprise that wants to distribute insurance. It doesn't matter who it is, whether they're licensed or not licensed, right? They're new to insurance, or they're someone who's been doing insurance business for a while, like a bank or a broker. So that's sort of, that idea worked. We sort of, over a journey, we have achieved product market fit and growing fastest in our space in India, and just entered another market as well. So I don't know if it answered the question, but essentially I was trying to kind of conceptualize what the person was asking and marry it to our own journey and share the story, if that helped.
I believe you've also told us that you're in a day zero sort of a place when it's a day one sort of a market. So I think you gave a better picture, or you helped us in understanding it better. Here's another question. Again, this is from the social media. Speaking specifically about technology though, till now we've spoken more about non-consumers. So this question is more towards the consumers, asking how does the modern technology influence the consumer behavior in the insurance space? So any thoughts on that from your end?
How does, you need to kind of repeat the question for me, sorry?
No problem. How does modern technology influence consumer behavior in the insurance space?
Oh yeah, I mean, like, I guess the question becomes, what is modern technology, right? Would you consider APIs as modern technology? It is something that has been around for decades now, right? And we're still building business models on it, and we're still saying that we are a day zero startup. So, but if you look at neo technologies, relatively speaking, like AI and slash ML and sort of connected use cases using RPA and all of that, there is a long way to go to bring those kind of technology capabilities to mainstream life, right? You just started to scratch the surface. Like insurers are using AI startups, etc., and leveraging their capabilities to make their underwriting that much more efficient, becoming faster, cheaper, better versions of themselves using technology. Distributor is using platforms like ours to digitize their overall playbook and make insurance distribution simple, effective, scalable, so on and so forth, and cost effective. Consumers are using these digital platforms and buying insurance at a place that they trust, right? It's no longer an imperative that that you want to get your health insurance, say, only from certain kind of distributors. Tomorrow, we are in conversations with sort of some health clubs, right, who want to provide health insurance to their members. So why, if I work out with someone and sort of, exercise with someone, and sort of, why can't we all pull in together and buy an insurance policy ourselves, right, together? So these are the kind of, things that are happening, sort of, very exciting stuff, long way to go. And technology is at the center of all of this, right? It's not a by the way anymore. So we think the biggest of companies that are going to come out of insurance as a industry slash space are going to be from the Insurtech space, or from the Insurtech thing, as against traditional insurers, which have a play as well, right? Don't get us wrong, but sort of the the what's exciting and sort of a lot of scale involved is where there is capital efficiency and in the entire business model. So yeah, so very excited about where technology can go.
Some interesting things for sure. Here's another question about the consumer behavior itself. This is from Jay Shankar here, live, was joined as live. The terminology which is used in insurance documents is quite hard for a common person, and there are for sure chances of selecting wrong policies, right? Mis-selling is something that you also spoke about at one point of time. So Jaishankar asks, will this, by the terminologies and understanding of the terminologies by a common person, will this be a hurdle for buying insurance from aggregators' growth? So how will that play out is something that Jaishankar is asking.
So it's always been a problem, right? It is a space which is tightly regulated, so there are jargons involved that need to be carried over to the letter and spirit as well. Some of it is avoidable, some of it is non-avoidable. People get confused. It is not like selling tires, right? It's the most, like I said, it is the most complex product to digitize and democratize. The reason is because it's not a pull product. Even after you push it and then you buy it, there is very low gratification. You're paying money for something that is promised to repay multiples of at some point if something happens. You don't want that to happen in the first place, right? Who buys motor insurance on the back of getting excited about getting covered for accidents, right? You don't want the accident to happen in the first place, right? So there is a very low gratification and all of that in this space. So, but the question becomes, how do you make it from a consumer experience perspective, make it more contextual, right? That's where embedded insurance comes in, right? Getting sort of rental insurance. We just launched this with housing. Some PR has gone out. Very excitingly, we did we're doing thousands of policies now with them, where rental payments, when sort of you're making rental payment, at the point of making a rental payment, if a rent protect cover is there, that covers the tenant in case of something happens, right? If there's an accident that happens and the tenant has to get hospitalized, the last thing on his or her mind is to make the rental payments. But that is the bread and butter for the the landlord, right? The landowner, or whatever be the sort of the terminology. So in this particular case, if those kind of things happen, then the insurance makes the payout and covers for that sort of, potentially that the tenant can use to cover for rent, not get thrown out of the house, right? And this happens very contextually in the context of making rental payments on a monthly basis, and covers only during that month. So amazing product, right? So what we did was we kind of scoured the entire market and got the right insurer to underwrite the right kind of product, build tech into that, and now we are taking it via channels like housing to markets. So just as an example of how you can make insurance, which is quite complex, but when you contextualize it and embed it and all of that, it can become quite meaningful and easier for the end customer um, to purchase the policy or make avail of the policy and use it.
Makes sense. Definitely exciting times. In the interest of time, we'll take one last question for the day. So more of a general question, and what's the future sort of a question. What, on your view, do you think emerging Insurtech startups should focus more on, considering the current landscape? To simplify, maybe I can tell you, I can ask in a way that, what are one or two tips that you'd want to give to the emerging Insurtech startups in the current landscape?
Yeah, I think the question should be more about what kind of, the thing is, because it is such a slow moving large industry, there is an opportunity wherever you see it, right? There is not like there have been winners that have been, except for certain spaces, there is no winners, right? Largely speaking, relative to fintech. So I think the real question is, what am I passionate enough to solve for in the context of solving for the insurance industry with an Insurtech approach that I wouldn't mind doing for the rest of my life, right? I think that is it's more of an inside-out question than an outside-in question, if you ask me. So whoever asked the question, if you're thinking about starting up, don't think twice. Just jump in, build, see where it takes you. You may be wrong, as long as you can assume that risk. There is nothing stopping, and if not, there's insurance for that. I'm just kidding. There's no insurance for that, but I wish there was insurance for that.
We wish there was definitely insurance. Thank you so much for that, Chiranth. And yes, Chiranth, we're extremely happy for you taking the time to address the Tether community today. So on behalf of the community, M2P Fintech, and myself, thank you so much for being a part of today's webinar and helping us in understanding insurance, Insurtech, and the entire world. I felt like you opened the entire world for us to have that small glimpses there. So thank you so much, Chiranth, for being a part of today's webinar.
Pleasure to be here, and good luck to the Tether community. And thanks again for having us over. Have a good day.
Audience, thank you so much for being such a wonderful audience. Definitely hope you enjoyed being a part of today's webinar. That is Insurtech, the Emerging Fintech Accelerator with Mr. Chiranth Patil. Do catch up on all the action at Tether community. So that is www.tether.community. You can find the link on the chat box, and do not forget to log on to our website to join us as a member. And I'm your host, Anagha, signing off for today, wishing you all a very, very happy Christmas and a happy New Year. And definitely the near future is the weekend. So very happy weekend as well. And it's a wrap. Thank you so much, everyone.